It's Tiger Trades. So just gonna go over a few things real quick. Mainly going to be a video about oil, but I did see something I liked in Palantir today, so I was just gonna hit that real quick. So if you look at the daily from where it gapped down on earnings, if you set the Fibonacci there down to where it kind of bottomed right there, you see that it's starting to head up to it battled with the 0.236 fib. It's up to the 0.382 fib, which it's all conjoining right here, where you can see the anchored VWAP from before earnings when the gap down is converging with this upward channel from the last, let's see, since September 23rd we've been in an upward channel. And when I looked at it shorter term, what I liked was I just saw this little, like we had a bad futures and opened up a little bit lower this morning and finished strong. But I saw this like little falling wedge here and kind of knew it was kind of bottoming out right here. Got some calls around this area. Well, really, when it was starting to come back up, because I just had a feeling like there's no way it's going below $8. Anyways, it started to bounce up and down. I realized that it was coiling, so I sized back up right when it got back down to this level, and then it just kind of launched up, and it's been hanging out here. I already like the position because I do have some long calls, but this was more of a shorter dated play. So yeah, it ripped up. Let's see. Like 5%. And then, so yeah, that was a nice quick little play there. And then when I look at oil, which is the main point of this, one last thing with Palantir. The reason why I'm bullish, not only because of this chart and this huge gap right here, up by the 0.786 fib, I'm bullish because Palantir has actually helped Ukraine beat Russia, and they're probably going to crush upcoming earnings, which is on November 17th. Because of all the white glove work they're doing right now across the world, because that's what they do. They work with governments. They do that kind of stuff. So anyways, if God forbid, if Taiwan is invaded by China, Palantir will be employed by Taiwan to do the same thing they did with Ukraine, help them beat Russia with technology and software. So anyways, onto oil. So today there's some big news in oil. The OPEC on, I believe it was Saturday, decided to spring a sudden in-person meeting. It was supposed to be over Zoom, and then suddenly they changed it to in-person on Saturday, meaning that they're going to have some major announcements and probably a major production cut. At first, it was whispered that it was going to be a million barrels per day cut. Then it was whispered that it was 2 million barrels per day cut. It ended up being 2 million barrels per day cut. But when I was doing some deeper digging, I figured out that this really only is a 900,000 barrel per day cut. Because some of the OPEC members weren't meeting their quotas. So they weren't actually producing how much they were supposed to produce. So this cut is kind of just catching them up to the benchmark. So anyways, it's really only a 900,000 barrel per day cut. But the main problem I see with oil right now, besides we'll talk about the chart in a second, but as of September 7th, this Strategic Petroleum Reserve, the SPR, had 450 million barrels left, and it normally has, I believe, 718 million barrels of capacity. So anyways, on March 31st, 2022, President Biden announced that they'd release 1 million barrels of crude oil per day from the SPR for 6 months. They've now extended that to through November through the midterm elections. So as of today, there's probably approximately 422 million barrels of oil left in the SPR. If this continues till November, that's a lot more oil that's coming out of the SPR, while production is also being cut. Now, mind you, right now it's kind of null and void because we're putting out 1 million barrels a day, and this cut really is only 900,000 barrels a day. So, if you look at it, 100 barrels per day based on the last small increase, when Biden went hat in hand to Saudi Arabia and barely got a 100,000 barrel increase. That equates to about 86 seconds of global oil demand, or 1 minute and 26 seconds. So basically, with us putting out 1 million barrels of oil a day, and them cutting by 900,000 barrels of oil a day, they're really only cutting by a minimal amount. So it's not going to affect prices that much in the short term. But the problem is that as the SPR gets drained more and more, we're eventually going to have to refill that. And that's where these investment opportunities come in. Because I believe personally that energy is not only going to continue to climb in the S&P 500 index weightings. It used to be near the bottom. It was a tiny weighting. I believe it's going to climb up to the top half of the S&P 500 sector weightings. So, anyways, when I was doing some charting, I've been looking at this for a long time. So, anyways, it was in this long channel, totally broke that channel. So let's go down to the daily. So it's in this downward channel now. It just kind of poked its head. It's still trading, obviously, but just poked its head above this on the daily. And I believe that, when you connect these two peaks here, this is the March 8th high. And when you connect that with the June 14th high, you kind of get this little trend line. And I just everybody's talking about what oil is, what WTI is going to be at the end of the year. So I just put a marker there for the end of the year, that last trading day, and it kind of brought it right to about 112, which everybody's kind of saying it's going back to 100. I think it's easily going back to 112. I truly think it's going probably over 130. I think it's going to retest that and then break through, because normally it doesn't break through on the first test. Because this, in all reality, was a test, because 147 is the high from, let's see, where was that? It's way back. That's the high from July 08. So, in terms of short-term plays, well, actually, no, these are really going to be more longer-term plays. I like Transocean, which is ticker RIG. It's offshore drilling. I like LNG. It's a Cheniere. It's liquid natural gas. EOG Resources. That's hydrocarbon exploration. That's EOG, obviously, ticker. PXD. That's also hydrocarbon exploration. Valero, VLO, is a refiner. Marathon Oil, MRO. Venom Energy, which is VNOM. It's actually a subsidiary of Diamondback Energy, which is another pick of mine, which is FANG. But needless to say, that's a lot of jargon and a lot of stocks to pick through. And if you're kind of more of a simple, dollar cost average, throw a couple bucks in every week, and rebalance and keep chipping away at adding to your portfolio. If if you're one of those people that prefers ETFs and doesn't want to worry about individual stock risk and all that, I do have some ETFs that I really like. So for instance, I really like, if you got some bullishness in you, ERX, it'll actually give you, oh, see, I saw a little inverse head and shoulders there, and it actually worked out. And then we, had all that stuff happen. But anyways, this gives you 2 times the performance of the energy sector. IEO would basically be a lot of those companies I just said, but it's a lower expense ratio ETF, and it's not leveraged. And then FCG would be for natural gas, also not leveraged. And then UCO would be leveraged, and this gap still has not filled way up here. So I like this one a lot. So anyways, this is 2 times the performance of the Bloomberg Commodity Balanced WTI Crude Oil Index. So needless to say, this is a good trend to play. In June of 2020, energy was 2.82% of the S&P 500. As of September 30th, 2022, energy is 4.5%. My theory is it's going to climb up at maybe near 8%, maybe even further, but 8% at least. Yep, that's all. Tiger Trades. Have a good day. Take care. Bye.